Ladies and gentlemen, dear investors, on behalf of BB Biotech and Bellevue Asset Management, I would like to welcome you to today's BB Insights video update on BB Biotech, following the publication of our first quarter 2021 results last Friday. My name is Silvia Siegfried-Schanz and I'm working in BB Biotech's investor relations team. BB Biotech delivered positive results for the first quarter despite a market environment characterized by profit-taking in the healthcare sector. Global COVID-19 vaccination campaigns are ongoing, and we believe their progress will lead the way out of the pandemic. Now I'm happy to introduce Dr. Daniel Koller, Head Investment Management of BB Biotech, who is here on the call with me. He will elaborate on the current market situation, give a short update on our current positioning, and introduce our new companies that have been added to the portfolio during the last 3 months. Daniel, the stage is yours.
Thank you, Silvia, for the introduction and welcome from my side. I'm happy to present you a quick update regarding the Q1 figures as well as events that happened, and give as well an outlook regarding BB Biotech and the industry that we have. You see the slides. We have there 4 topics that we would like to address. First, starting off with a quick overview about BB Biotech, then the investment strategy, as well as, I think most importantly, the new portfolio composition, as well as the new portfolio holdings as such, and then close it out with an innovation update regarding in what do we invest, and we have there the core investment example with Moderna, and then close the presentation and the update with a quick outlook as such. As you know, BB Biotech is a Swiss investment company. We don't have to go in all these details. I think to be highlighted in the context of the first quarter is what you see on the right-hand side, that we have the dividend payout of 3 Swiss francs 60 behind. You see in the same context that the leverage has increased from an investment degree close to 100% per end of first quarter to 9% by the end of March. And the reason for this has been that the dividend payment of 5% resulted in a short-term increase of the leverage, as well as that what Silvia already has described, a volatile or more volatile first quarter has resulted that the team actually took the opportunity and invested further into both 2 new positions as well as into existing positions. As such, I said the leverage has slightly increased in that context. You see on the long-term chart, I think we are still very proud of our long-term evolution as such, that we are in the 15% compounded total return for both the share price and the net asset value in US dollar terms, and that we have continued to build out the long-term outperformance against the Nasdaq Biotech Index. But what you see here as well is that we had a peak in the February-March timeframe, and then a sell-off going on, or a profit taking in the March timeframe. And that's more or better depicted actually on slide number 7, where you see last year in more detail, starting off with obviously the first quarter sell-off with the SARS-CoV-2 pandemic, and the equity markets very negatively reacting to all of this. Then the rebound that was driven because biotech it became clear that biotechnology and the industry was an important, or is an important player in the solution or offering solution for the pandemic. Then a consolidation in the third quarter, and then with the positive phase 3 results for the first vaccines that we had, it was clear that these were positive, and I said that was the trigger for an extended rally that lasted all the way into January-February timeframe, and then you saw a sell-off, given that a lot of investors started to rotate. And the same is what you see at the bottom part in the box. 2020, a very strong year for the biotech industry. All in all, the first quarter, as said, initially positive all the way up to double-digit gains, and then we gave them up in the last month of the first quarter. You see here minus negative 1.2% for the net asset value in US dollar term. If we consider this in Swiss francs term, it's actually positive 5.5% for the first quarter and 2.9% in euro. And the share price performance the share price has held much better with a 15% gain in Swiss franc terms and 14% gain as such in euros. You see here on an annualized performance, actually, that the 1 year performance obviously very strong, because as I just outlined, that was driven by the rebound starting or following the first and the weak first quarter of 2020 as such. And you see that on a 5 and 10 year, and since inception, actually, I think a very positive, both total return on a compounded basis, both for the share price and net asset value, and continued outperformance, as I said, against our benchmark. That's the Nasdaq Biotech index as such. To the investment universe, we continue to consider new investments following the same philosophy. That's, I think, very well proven and as well clear for BB Biotech, our so-called S-curve strategy that we continue to invest into, meaning invest at the lower part where the S-curve touches the red circle, and we continue to divest if companies obviously achieve large cap status, more maturity, and start to decelerate in growth. And you will see later on in the portfolio composition that we continue exactly to execute along those lines as such. The new portfolio, as disclosed with the Q1 report, let's start with the two new positions at the lower part. ESSA Pharma is an oncology play as well as a Revolution Medicine. You see as well that the portfolio is now much more balanced with, I would say, the core holdings all in the higher single digits. And I think a bigger bulk of mid-sized portfolio holdings in the 2 to 4% range. I think that's much more balanced as such. And I said, what you don't see here is that we exit as well 2 positions. This was Voyager Therapeutics as well as Cidara. 2 very small positions that it became clear that we didn't want to invest further. Our investment hypotheses were broken and we saw better opportunities elsewhere. And both these new additions are actually in the oncology space. And that's what you see on the next slide on page number 12. Orphan disease is still the largest part with around a third in the portfolio, closely followed by oncology, where I said we had the most active allocation in the portfolio throughout the first quarter, with neurology still in third place. And these 3 disease areas making up around 3/4 of the portfolio. In the middle chart, you see the different modalities, meaning with which technology or molecules actually drugs are developed or are the basis for drug development. Small molecules still in the lead. The RNA therapeutics somewhat larger, given as well Moderna making more impact in the portfolio given its strong evolution over the last couple of quarters, followed by antibody and then gene and cell therapy, where actually we had probably the highest volatility in the first quarter. This is an area where we both have taken profits first early in the quarter and then added back to this position in the later part of the first quarter. So there it was a bit more of active capital allocation as such. And on the right-hand side, I think the cut in terms of market cap, and you see there compared to, for example, Q4 or end of last year, that the above 30 billion market cap has gone up, is now around 20%. This as well because Moderna has made it now consistently into the larger cap area, and the mid cap or larger mid cap space in dark red. That's where Moderna, for example, was in the last quarter. That has decreased somewhat. And the active allocation, as said, the new positions like ESSA Pharma or Revolution Medicine are in the gray part, meaning the below 5 billion market cap, where we still continue to seek most of our new investments as such. Let me quickly introduce you to the new 2 new positions. Start off with ESSA Pharma. ESSA Pharma is an evolution of our long-term investment scope into the prostate cancer field. And we crossed ESSA as such because, or we considered ESSA quite very interesting early on, because they had a different approach. In the past, the industry has focused on 2 main areas that were to lower the testosterone in prostate cancer patients, or the other side was actually to block the androgen receptors activity. These were the two major classes, but one of the major remaining medical needs as such were actually resistance that built up. And you see at the lower right-hand side, actually the androgen receptor, where I said if there were mutations in the ligand binding part, actually these two classes in general didn't work anymore because the androgen receptor was always active. And that's why ESA, I think, is very important, because they develop a drug that actually binds the so-called N-terminal domain. We think that's from two angles very attractive. One is, I said, it can address potentially resistant or patients with resistance to the existing classes. And secondarily, it can be combined with these two new classes actually to move into earlier lines of therapy, and by that become what we think a very attractive mid and long-term investment case for Biotech. The second new investment was, or in the first quarter, was Revolution Medicines. Revolution Medicines came from the due diligence in the field of oncology as such, but actually considering what were drivers of so-called oncogenes. There we have different biology strategy or biological strategies, how cancer can actually grow. One was the gene amplification, one was the gene fusion, and I said an important one is obviously gene mutation, and that's actually where Revolution Medicines play at its strength. And you see at the bottom right-hand side in this chart there, actually what we think is at the core of our investment case for Revolution Medicine. They use actually the so-called cyclophilin A, what here is described as the chaperone protein, have their small molecule inhibitor that sits there in the middle and actually binds mutated RAS as such, so a mutated oncogene. And I said this tri-complex then actually allows, I said, to block actually that pathway. And by that, we think has the opportunity, as I said, to tackle many of these mutated RAS versions that exist. And that will be as well something for the clinic, mostly in 2022. So we shall see a bit earlier stage investment, what we think very attractive, given a set of modality that allows to tackle many of these RAS mutations that so far have not been addressable as such. And to close it out, coming to the third part already of the slide deck, you know this chart in terms of BB Biotech's evolution and investment into the different modalities and technologies. Here you see on the right-hand side the investments of 2020, first of all, as well as the two new ones, Revolution Medicines and ESA at the lower part, both actually small molecule strategies, but we think highly attractive ones addressing, as I said, unmet medical needs that I just described. But I said we follow and continue to invest into, I said, new technologies as such. And to close it out on that part of the presentation, and we want to quickly highlight again the so-called RNA-based medicine, not as in the past, the blocking strategies such as for Ionis and Alnylam, but actually the other way around, that you can use the messenger RNA as obviously a modality to develop drugs. And the reason for that is Moderna obviously making or having very large success with its prophylactic vaccine, the mRNA 1273, as a prophylactic vaccine for SARS-CoV-2. As we are all now aware, you see here on the right-hand side the chart of Moderna. It was our only investment in the private equity side over the last couple of years. The company made an IPO back in December 2018. And you see there a volatile ride, but I said the share price now back to all-time highs as of April. So a very, very successful investment case for BB Biotech, given I said that Moderna has leapfrogged pretty much through the S-curve. And in the context of, I said, its SARS-CoV-2 vaccine became both a large cap company in terms of, I said, a multi-billion top line, as well as a highly profitable situation for the company. Why we are invested is what you see on slide 19. That was what we considered both a simple but very intriguing concept, that you can use the messenger RNA actually obviously as modality to have protein expression within a patient, or in the context obviously of a vaccine in a healthy volunteer. So you see at the bottom part there, I said the DNA as our storage function, the messenger RNA as software or transport of that function that drives then, I said, a wide variety of application. And that's exactly what you see on slide 20. That's actually the pipeline chart of Moderna updated. The main two investment or modalities that we are most interested in were the prophylactic vaccine. I said there, the new situation compared to, for example, beginning of last year, that now the SARS-CoV-2 is commercial and obviously rolled out very successfully on a global scale. But you see as well a lot of other, what we think, very attractive mid and long-term opportunity that are actually seasonal, so repeat businesses, such as, for example, CMV that has now moved or will move now these weeks and months into a registration phase 3 trial. The RSV vaccine, for example, making progress, or you see there a new project, for example, for the seasonal flu vaccine that we think makes a lot of sense, given a set now the mRNA obviously proven. And then they have different modalities on top that I don't want to touch for time reasons, but I said Moderna, we think very attractively positioned for the long term, so way beyond the pandemic. We think Moderna will remain a core position within BB Biotech. And I said, last but not least, the outlook for 2021. The key topics that we want to highlight here are the 3 bullets: technology, the administration, and US healthcare policy. We think technologies will continue to make rapid progress, and we think we are actually at a very intriguing point in time for the biotech industry, that multiple actually new drug modalities making headways, the RNA-based medicines coming from an orphan niche era into mass markets, gene editing now moving actually through late stage clinical trial, and we think within the next 1 or 2 years making their first entry with potential approved products. We think in the gene therapy space, a lot of evolution that continues, for example, our Generation Bio as an investment now with virus-free approaches that we think are intriguing, or I said a fate, just to highlight here a couple of names in the cell-based area. So a lot of technology progress that actually we think will address high unmet medical needs and address large patient population ultimately. And we think that's the major driver for, I said, attractive long-term returns. The 2 other topics that we highlight here is administration. Very importantly, the FDA still has its ad interim acting commissioner with Janet Woodcock. So we think in due time, or in actually the next couple of weeks, months, the Biden administration will announce who the next commissioner shall be. But we continue to see actually very positive situation layout for the industry. A lot of product approvals happen even through the pandemic. And I said all the technology progress and actually a record number of clinical projects ongoing. We continue to foresee that, I said, the product cycle now being at a very attractive point in time. And last but not least, the healthcare reform and politics. So the Biden administration obviously announcing big projects such as infrastructure projects, tax restructuring, that's considered, as well as obviously continued discussion around healthcare reforms. This we watch very carefully, but I said consider that the industry is there very well positioned to handle whatever is discussed, being it drug price reforms that we think, as said, are not as extreme or not as aggressive as sometimes discussed. So we foresee as well that this will be over time, or that we have further clarity, and that this will ultimately be addressed. And the highlight, I think, to address all of these potential as well threats, or I said pressures, still continues to be what the innovation power is. And you see here, for example, in the first half of 2021, a lot of milestones. We have passed already many of them. I would say the initial ones were as well a mixed bag, so to speak, in the first quarter. So we had, for example, a major setback to start on the negative with tominersen. This was a negative surprise for us, an investor, as well as for Ionis, that Roche early outstopped, for example, the large registrational trial for Huntington's disease. But you see as well a long list of positive milestones that we already have passed. And we consider actually a lot of interesting, I would say, core milestones to come. And I just, for time reasons, want to mention a few. So for example, at the bottom part of the second column, VX864 is, for example, we think a very important project for Vertex in the alpha-1 antitrypsin space or disease, where we think we're going to get first phase 2 results. I think that's going to be very important. And then second half, even longer list of milestones due, for example, this tofersen for ALS in collaboration with Biogen and Ionis, where we're going to get registrational data released, as well as then, for example, Sage Therapeutics, which will have phase 3 results in major depression disorder, as well as in postpartum depression, just to highlight a few of them. And the same is true for the product approval cycle. So last year was, as you see here, a multitude of product approvals with one negative. That was for Intercept, but then many important product approvals that made it through. The year started off positively with cabozantinib approved for Exelixis, as said, in combination with a PD-1 antibody as such. And one of the highlights, not just for our portfolio of importance now with Biogen IDEX aducanumab, that was pushed out from the first quarter into second quarter, but we think this is going to be one of the more obviously binary decisions that the FDA will take. But you see here a long list of what we consider important product approvals that continue to drive the chart that you see here on page 25. That's actually our revenue ownership that we have from our portfolio holdings. Just as an outlay here, for example, the COVID-related revenues for Moderna are not included because it's short-term upswing, and then we consider in 2022 and 23 these to come off again from its peak. So this is, for example, not yet modeled out, and we will update this as well in due time. But what we want to highlight here, as said, is that we have here a continued strong uptake. With every year you see here a layer of additional products that make it, or our expectation is that they make it through the registrational track as such, and then launch these products. And you see here a layering of growth, and that we think is set at the heart of BB Biotech's investment approach to invest into small and mid-cap companies that have here a direct link into this growth trajectory for us. So to close it out, from a portfolio stance, we think we have a very attractive balanced portfolio that offers both exposure to the large, mid, and smaller cap, with obviously our weighting more towards smaller mid-cap space that we think will drive a lot of upside valuation potential as such, as said, through these leading technologies that I tried to describe to you. The team and board is, I think, very well positioned, and we have high conviction regarding asset value and upside potential of our portfolio as such. And last but not least, the whole is combined with what we consider to be a very attractive dividend policy that, as I said, has been outlined by the board of directors to continue the foreseeable future as such. And last but not least, I would say a newer topic that we start to disclose now on our fact sheet as well as in our presentation. That's, for example, our ESG that we have to measure, and we want to measure as well in terms of the portfolio. We have considered this for a long term in terms of the portfolio investment from the team and the board, how we do that. But you see here now, I said, in the standards that we clearly fulfill. So we follow on an exclusion basis regarding the United Global Compact standards that we have disclosed here. We have a low carbon footprint. I think that's part of the biotech industry per se. We follow, as I said, an ESG approach, but not a best-in-class approach, but all the other points we score. And then last but not least, you see at the lower right-hand side an ESG scoring where I think we are in line, slightly better than actually the average benchmark. As such, here just to highlight that the biotech industry per se is ranked lower than other industry. I think that has mostly to do with because the industry is driven by a lot of smaller and mid-cap companies. So we expect here as well a continued evolution that the rating and the scoring will improve over time if these companies make more progress over the cycle. And with that, I thank you for actually your interest and your attention, and hand it back to Silvia for closing comments. Thank you.
Thank you, Daniel, for this interesting presentation. And thank you, ladies and gentlemen, for your trust and interest in BB Biotech. Should you have any questions or feedback following that presentation, please feel free to get back to us anytime. Thanks again and talk to you soon.